Okay, this video is the second in a series of Uniform System of Accounts for the restaurant industry, how to read an income statement. And this video is discussing specifically the 7th edition, 7 edition of the Uniform System of Accounts for the restaurant industry, and only the profit and loss statement, or what people typically call the income statement. Your lecture notes are available up on iLearn, and I'm going to show you where on iLearn again. So if you go to the iLearn site, so this is our iLearn site. If you scroll down to the topic that we're at right now, which is Uniform System of Accounts, Budgeting and Forecasting, your lecture notes are here, and the income statement Excel spreadsheet that I'm going to be using is also posted for you guys here. Okay, so that's where you would find today's lecture notes and the supporting Excel sheet for it. We kind of zoom into your lecture notes, and you'll notice that I have the 8th edition and the 7th edition. If you look back on the playlist, there's a separate video for the 8th edition and how to interpret the 8th edition Uniform System of Accounts Profit and Loss Statement. Okay, so for the 7th edition, I'm going to go to the Excel sheet. I'm going to zoom in a little bit. Okay. So if you've watched the video for the 8th edition, some of this stuff is going to be a little bit repetitive. Some of this is going to be a little bit repetitive, but bear with me. The first few columns of the income statement are the names of the line items. So the headings for the line items, the actual line item names, the amounts, the dollar amounts of those line items, and then a column for the common-sized calculations of the dollar amounts. So, for example, the common-sized shows each line item as a percentage of total sales. So, food sales are a percentage of total sales. Ooh, D7, I actually have that done here. Well, oops. It should actually be, I'm going to do that right now, as that. Okay. So of these sales, okay, and you'll notice that it's like that, and I'm going to go ahead and copy that. Oops. Oh, gross profit. Yep. As a percentage of total sales. Okay. And oops. And as a percentage of, I'm going to zoom out. Okay, and I'm going to copy the format. Bear with me here. Delete, delete, and I'm going to make that into percentages out 1 decimal point. Okay, that's a bit better. There we go. Where am I looking? Bottom border, top border, bottom border. Okay. So all of these line items are as a percentage of total sales now of the correct income statement, as a percentage of total sales, as a percentage of total sales, right, as a percentage of total sales, okay? So all of the numbers here are as a percentage of total sales. It's each line item as a percentage of total sales, except for the cost of sales area. For each cost of sales, the percentage is as a percentage of its respective sales line. So for example here, food cost of sales is a percentage of food sales. Beverage cost of sales is a percentage of beverage sales. Okay, so these, under cost of sales, right, these specific line items are as a percentage of their respective sales lines. They are not as a percentage of total sales, as is the case with every other line on the Uniform System of Accounts. Okay, we have a subtotal here. We have subtotals here for that add up all of our individual line items of sales. We have a subtotal here of each individual cost of sales lines that were broken out. After sales and cost of sales, we have a gross profit line that just takes sales, total sales minus total cost of sales. This is different from the Uniform System of Accounts 8th edition. The the 8th edition goes into labor, right, and then has a prime cost line, and then yada, yada, yada. For the 7th edition, we go straight to a gross profit line. So it's just sales minus kind of cost of sales, and we get a gross profit line. This is one of the major differences between the 8th edition and the 7th edition. After gross profit, we go into straight operating expenses and the individual line items of operating expenses. You'll notice that here, this is what's considered labor in the 8th edition. Okay, and in the 7th edition, we combine the salaries and the wages together. So salaries meaning it's generally management that is under salaries, and then wages are the line level employees and people who are paid by the hour. 7th edition, we roll it all up into one, but we do have benefits out as a separate line. Okay, direct operating expenses, all these other expenses here, all these other expenses, right, are part of other controllable expenses under the 8th edition. So I'm going to highlight these in yellow. These are considered other controllable expenses under the 8th edition, but under the 7th edition we just kind of lump them all together. These two line items, and then other expenses, and then interest expenses, these, I'm going to highlight them in, I don't know, green. Ooh, that doesn't show up very well. In orange. So these orange ones are bundled up into non-controllable expenses under the 8th edition. Okay. But under the 7th edition, we just go ahead and sum them all up, subtotal operating expenses, because we consider them all as a part of operations. And we calculate ourselves an operating profit, which is just the gross profit minus total operating expenses. So the operating profit, right, or the operating income, as it likes to be called in the 8th edition, they're the same thing, right? These should be the same numbers. Ooh, except for here, right? So yeah, never mind. Let me back that up. Operating profit and operating income are going to be slightly different between the 7th edition and the 8th edition. The 8th edition would have also taken out these items. So it's probably best not to compare operating profit between the two different formats, right? Make sure that you only use one format, Uniform System of Accounts 7 or 8, if you're going to compare across different years. Make sure that you're speaking the same language. The only line item that really is the same, like summation line item, is going to be the income before income taxes, or other people would like to call it earnings before income taxes, right, or EBIT, okay? This line is the same between Uniform System of Accounts 8 and 7th editions, okay? So these line items, what goes into each one of these line items, I would refer you back to Uniform System of Accounts 8 for explanations of what these individual line items are. But the key differences between the two formats have been highlighted. So 7 does not have labor pulled out as a separate line item. And because it doesn't have a separate line item, maybe now's our time to go back to here, right? So because 7 has labor down here, and labor is up here for 8, right? We don't have an easy place to calculate and show prime costs, while Uniform System of Accounts 8 has a separate prime cost line. This is one interesting improvement on Uniform System of Accounts 8 on the 8th edition. Okay, it's also kind of nice in the 8th edition that management and staff costs are broken out separately, right, are separate from each other now, as opposed to just kind of rolled up in between, like, you know, together. So you know how much hourly you have and then how much management you have. Okay. Whether costs are controllable or not, versus not controllable expenses, There's something to be said for just having them in one big easy lump up here. It's arguable whether corporate overhead is an operating expense or not. It's a debate that's, you know, greater than the scope of this course, but some people may argue that it's a part of your operations to have that name, that it's almost like a form of marketing that you're paying for. And, you know, if you didn't have that name, you wouldn't be able to operate in the way that you did. So, you know, there are arguments for and against keeping it within regular operating expenses. And for most, you know, owner-operated establishments, it doesn't really matter if this kind of latter half of the income statement is in, you know, 7 or 8, right? If it's in 7 or 8, because management is the owner and presumably they have control over these expenses on, you know, when they make their decisions anyways, and they're not being bonused on whether they can control or not control because they own the business, and at the end of the day all they really care about is the EBIT in either way. So whether you're dealing with the Uniform Systems Account 7 or 8, just kind of remember the pluses and the minuses. This breaks things out a little bit more finely, but then has some judgment calls in terms of what is controllable or not controllable. You know, some places the equipment leases are decided upon by management, right? They get to decide whether they lease the ice machine or not. And so who's to say that, you know, it is or is not controllable? So there you go. So that's Uniform Systems Account 7, the P&L versus 8. And the next video that'll be coming up is how you would compare one company versus another.